All right, welcome to The Big Skinny with Lou Basenese, and I am your host, Lou Basenese, joining you again from our studios in Brooklyn after a nice holiday break. We had two holidays, folks, Memorial Day and Nvidia Day. We're going to get to that today. The title of this episode is none other than Top 10 AI Stocks Not Named Nvidia. That's right, we've got a lot of innovative and under-the-radar content for you. But first, you're probably wondering, if you've never joined us before, who's this guy and what's this Big Skinny all about? Well, let me tell you. The Big Skinny, the Urban Dictionary definition, is insider information, but we are not about that. We don't like to end up in jail for securities law violations or fined by the SEC or do anything involved with wearing just orange jumpsuits. So what we are going to give you is the next best thing. We're going to give you the market's essential truths that help you make your way through these volatile times. I mean, if we had to come up with analogies, one of our longtime viewers called us the SportsCenter highlight show of financial news. I like to think of us like Dave Portnoy of Pizza Reviews, but for investment news. I mean, come on, everyone knows Dave and his one bite, everyone knows the rules. Well, he doesn't always just take one bite. And we're going to adopt a similar rubric here for what we do. We're going to share with you 3 headlines every week that we think you should ignore or pay very close attention to. 3 data sets that are really going to reveal why you should be a contrarian and not follow the consensus, and then follow that up with 3 compelling investment insights that can hopefully help you and me increase our bottom lines, because after all, that's what we're here for, right? We can have fun. Let's go, Lou. Violator 2020. That's right. We're going to... I don't know what we violated or what you violated, but we'll save that for later. Join the conversation. That's the other key thing here about the Big Skinny. We're live everywhere on multiple platforms, and you can chime in. It's a choose-your-own-adventure show, except I moderate slightly. So please do not be shy. Cue up the Pat Benatar and hit us with your best shot. And before we do that, we're going to get to this week's rundown. All right, this is part of the show where we go through the top headlines that you should be ignoring, but in some cases, this is the first time. Like Dave had one time where he took more than one bite. You actually should pay attention to this headline. This one comes to us about Bitcoin, and you're seeing Bitcoin all over the news lately, not just because everyone's going crypto crazy, but there's a new crypto craze, and that's for public companies to become proxies for holding Bitcoin. That's right, public companies that you were supposed to invest and hold and own a company, an operating business, are now just forming to buy Bitcoin. Here you go, Michael Saylor, who's the first one to implement this strategy at MicroStrategy, which he since renamed to Strategy, came out and said that, look, this is going global. Everywhere I go at this conference, someone says, you know, I'm working on a Bitcoin treasury company in Hong Kong. I'm doing this thing in Korea. I've got this thing I'm working on in Abu Dhabi. We're going to do this in the Middle East, you know. We've got this in the UK. There's an explosion of interest right now. Of what? Well, it's a thing, and they're going to do this thing, right? It's this thing of basically raising additional capital to go buy Bitcoin. And folks, this is something we should be skeptical of. First and foremost, it is going to drive Bitcoin's price higher from here. It's a simple supply and demand equation. And for those of you that watched, I think it was episode 3, we interviewed Anthony Pompliano, who halfway converted me. It was almost a religious conversion into crypto. I do see the merit of it, but now I'm seeing the manipulation. And if you look at this, there's a downside to all these companies that were never meant to own Bitcoin, that were meant to operate and generate a profit. You're seeing net long exposure in the hedge fund world because everyone's betting the price is going to go up. And it is going to go up because these companies are taking Bitcoin supply off the exchanges. And if you look at this week's money chart regarding the Bitcoin manipulation, you see the price is directly correlated, inversely correlated to supply. So the blue line shows us that the available Bitcoin on exchanges is coming down. And while it does, price is going up, it makes perfect sense. If Bitcoin isn't readily available, if the store shelves aren't stocked with Bitcoin, there's fewer and fewer out there, so people drive up prices. There's more permanent holders. Think of the gold bugs 2.0, but this is Bitcoin bugs 2.0. So folks, I want you to, not many people do this, reference Ice Cube in a financial news program, but you better chickadee check yourself before you wreck yourself. You got to have an allocation to Bitcoin, a small one, but don't go all in. That is a fool's errand, because when someone pulls the rug out from under this market and all these public companies stop holding Bitcoin as a form of treasury and to diversify their cash holdings, guess what's going to happen? Just like in the tulip bulb mania, when there's excess supply, there's going to be excess supply dumped back onto the exchanges, and that's going to lead to a decline in price. It's going to happen, folks. I don't know when, and just like shorting the market is a really tough thing to do, I'm not out here advocating you short Bitcoin. I'm advocating you be prudent and just think about it from a valuation standpoint. Bitcoin right now, if it were a single company, would be one of the biggest in the market. It would rival Apple and Nvidia and be pushing towards that first 4 trillion and then 5 trillion and maybe $6 trillion market cap company. So again, folks, the rundown this week is, yes, you should be skeptical. Follow those headlines, because the ones out there the most are being really bullish about Bitcoin. So what's up next? Well, let's transition to lies, damn lies, and not statistics, but analysts, right? Analyst estimates. Well, let me back up here for newbies in our midst. I have one key tenet about investing. It's the easiest rule you can follow to make sure you make money in the stock market. And that is that stock prices ultimately follow earnings. That's right. Stock prices ultimately follow earnings. That means if a company keeps reporting more and more profits, its stock price is going to go up. So the inverse of that means if stock prices or earnings are coming down, stock prices should be coming down. And sure enough, we hear analysts sounding the alarm bells that, look, they expect earnings to come down lower than anticipated. In fact, this quarter showed one of the biggest revisions that we've seen in a long time. Analysts revised their estimates for S&P 500 earnings by more than 4% this quarter. That's more than the 5-year average, the 10-year average, and the 20-year average revision. Should you be scared? Because after all, this is a math equation, right? A price to earnings ratio is the price of the stock over the earnings. And if the denominator gets smaller, it means the valuation goes higher. Don't act so fast, because no, look, I mean, there's a disconnect in the market, I'll agree, between analyst estimates and the stock price. If you look at it right now, stock prices keep going higher up and to the right while estimates are coming down. But here's the thing. Analysts are notoriously wrong. They're notoriously too pessimistic. They're never positive enough. And even the companies are saying, hey, we're not as pessimistic as you. So much so we're not going to withdraw our guidance. So all this anxiety that we've been reading in the headlines about tariffs, and yet very few companies, I think the count is maybe a dozen or maybe 2 dozen, have withdrawn. About a week ago, it was only at 8. 8 companies out of 500 in the S&P 500 said, there's too much uncertainty here for us to guess or even know what the future holds. No, that's right. It's a very small, minuscule amount. So look at the analyst estimates history over time when the quarter ends, what they expect for earnings and what these companies actually deliver. And here you see it in our money chart. The analysts are never right. Okay, all right, I'll give them a little bit of credit. They're like weathermen. They're right every once in a while when they predict the sun's going to come up. If you look back to Q3 of 2022 and Q4 of 2022, that's when they were actually too positive, but they're always too negative. And if you look what happened in the last quarter, analysts at the end of the quarter estimated that profit growth would be about 7.2%, and it checked in at 12.9%. There was almost 100% difference in that. So folks, don't be alarmed by the runaway downward revisions by analysts. They're wrong. They always are wrong. Well, not always. They're right every once in a while, but it's not something we should be concerned about. The time to get scared is when companies actually come out and say, hey, we're lowering earnings estimates and we're lowering growth forecasts for the year, or we're pulling guidance. That is a telltale sign that stock prices, at least for those individual companies, will be headed lower. But folks, I'm here to tell you it's all but guaranteed to be the opposite, because we have double-digit earnings growth expected from companies in the back half of the year. We get some tax cuts, some corporate tax breaks. We get a budget bill passed. We settle this silly trade war, and you've got the ingredients for another bull charge. So I'm betting on that with my holdings. You should be betting on it too. Now, this whole episode is, dovetailing off of Nvidia, so it's only proper that we end the rundown on some latest AI headlines. And I'm sure you saw the scary ones, the fear-mongering ones coming out from Sam Altman at OpenAI and Anthropic CEO saying AI could wipe out half of all entry-level white-collar jobs. That's right. Be scared, folks. Are you? Are you? Is this a Friday the 13th movie? Is death right around the corner? Well, Meta saying it's going to transition to full AI for advertising, right? This is a company whose 97% of their business is derived from advertising revenue and advertising sales. And they're saying, hey, corporations, we're going to automate all your ads. Mark Zuckerberg, in his next grand vision after the metaverse, which was a failure, in his next grand vision, envisions that you'll just come to Meta and say, here's a product, here's what we're trying to sell, or here's the action to take that we want, and here's some pictures of it. Write the ads for us, and here's how much we're willing to spend. And you're just going to hand that whole process over to a computer and to Mark Zuckerberg, who have no history of privacy violations or doing anything inappropriate with data. Yeah, sell the news, it seems. That's right, Prince Akeem. I'm sorry, I didn't mean to out you there. It's Prince A, but I know who you are, my friend. Good to see you. Prince and I have the rare distinction on playing for one of the worst college football teams in history. Good old Swarthmore College, D3, and they don't even have a team anymore. But yeah, sell that news. We stunk, and this headline stinks. Right? Join the conversation. Don't forget, you can chime in all the time on whatever platform you're watching us on. And right now, I just want to be a ray of sunshine, that jobs aren't going away from AI. Not half of them, not 10% of them. New jobs are going to be created, right? And look, it's going to make our jobs easier. And this is coming from Goldman Sachs. He's saying, if you're not familiar with this, he's talking about a prospectus. Before a company goes public, they file an S1, which is a long document that I think I'm the only one that nerds out about and reads. But he's saying you can do it 95%. I think 95% can now be done in minutes. This used to be a laborious process that involved executives and lots of lawyers and lots of fees. But guess what this does? It frees up time. This is the benefit of AI. It frees up productivity to do more with less. So we're not just going to lose jobs, folks, right? And it's okay if we lose some. We're losing population. I mean, I hate to be this is the downer part of the episode. If you look at birth replacement rates all the way across Europe, we're not replacing ourselves. You have to be over 2.1. Those fabled 2.1 kids and a white picket fence in America is not happening in Europe either, and it's definitely not happening in Southeast Asia. Countries like Taiwan and South Korea, they're like 0.8 and 0.9. So yeah, we can lose some jobs. We're losing some people in the global population, but what it's going to do, and I said this last week, I think it was on Varney and Company, or maybe the Big Money Show, I can't remember, but it was talking about AI and the fact that, listen, AI is a threat to job functions, but not job roles. And if you are in a role that can be improved or expedited or accelerated with AI, you best be learning how to use it. I think that's the admonition. Not be afraid of losing your job, but be afraid of getting behind because you can't handle the job that's coming about. So that, folks, is this week's rundown. Before we come back, we're going to have a word from one of our sponsors, and then we're getting to our top 10 list of stocks that aren't Nvidia. So, do you have this fundamental belief that everyone deserves access to quality healthcare, regardless of their financial situation? Well, at the Roberto Clemente Health Clinic, we make that a reality. And I say we because I'm on the board of directors. We're a US-based 501c3 nonprofit organization that's dedicated to providing affordable, compassionate medical care to over 30,000 people in the Tola coastal communities of Nicaragua, which, if you don't know, is the second poorest country in the Western Hemisphere. It's also a great surf spot, which is how I ended up finding out about this wonderful organization. Now, as I said, as a member of the board of directors, I've seen firsthand, and so has my family, the profound impact the clinic has on lives, providing a full spectrum of primary care, pediatric care, urgent care, and wellness education and services. Now, I'm not telling you where to donate your money. I'm just telling you to check out another good cause, because all donations go directly to support the mission, allowing us to continue offering these vital services. So please consider making a difference today. Scan the QR code on the screen or visit nicaclinic.org to learn more and consider helping out. That's right, it's nicaclinic.org. Together, we can build a healthier, stronger community. And we'll be right back.
What are you watching in all things Trump?
Lou's favorite fundamental stock that trades only on fundamentals, DJT.
Yeah.
That's a joke. It's down 8.5%, you guys, because look, they came out this morning and they said they've raised about $2.5 billion, $1.5 billion of that in equity, the other $1 billion in convertible debt to buy cryptocurrencies. Devin Nunes says that they think that cryptocurrencies are sort of the apex financial asset, and they're interested in it. The problem is this is a company with little revenue and I think a lot of losses.
It is. Here's the thing. I have to be intellectually honest. I called Truth Social in front of Devin Nunes dead on arrival when it
How
launched.
does he respond to that?
He was not happy about it. He said Twitter was a ghost town, which I rebutted and said they have 231 million users. But here's my thing. My fundamental argument against Truth Social from the beginning was you can't have an engaged social media platform that is only one side of the argument. And I'll give them credit and Devin credit too. They've diversified. So they're getting into financial planning and ETFs. They're now getting into Bitcoin, it looks like, at being a treasury. That's a smart diversification. They've used the tools well that they have available to raise a lot of money to give them those options. So from an management and executive management side, I got to give them credit where credit's due. I still don't own the stock, but they're doing the right things that could provide a fundamental reason for it. Welcome back to the Big Skinny with Lou Basenese, and we're here to talk about my top 10 AI stocks that aren't named Nvidia. Before we do that, though, I think it's important we set the stage. We give credit where credit's due because Nvidia has been a monster of a stock. In fact, I think when this is all said and done, it'll rival the returns of the best microcap, small cap stock that was ever out there, and that's Monster Energy, which went up 10,363 odd percent. If my memory serves me right. That's right. I have a memory that remembers really random facts and numbers about stocks. It's useless except when it makes us money. But let's talk about Nvidia, right? This is a company, ring that register, please. There's two camps when it comes to Nvidia. Those who invested early and rung the register, and those of us who invested a little too late and maybe made some money and are really hoping that we could double our money, triple our money. Here's the problem. I hate to break the news to you. It's not going to happen, right? We're not going to make thousands of percent in Nvidia right now, and here's why. Nvidia has a growth and market cap problem, right? There's a breakdown in all that they can do given their size. If you look at revenue growth rates for Nvidia versus its stock price, you see that these things went stratospheric. I mean, it was like a rocket ship blasting off with Nvidia and this purple line here going back in the kind of between 2022 and 2024. The growth rate soared from, 20, 30% to 100 to 200, and it peaked at 265%. You had 2 quarters there right at the peak of that purple line where it was 265 and then 264% year over year growth in quarterly revenues. And then what's happened? Well, we're coming back down the other side of the mountain. In the latest quarter, Nvidia's quarterly growth rate slowed to 69%. More importantly, they're beating estimates only by a smaller and smaller margin. So the market got used to running up and bidding up the stock price based upon blowout quarterly revenue growth, and it's just not happening anymore. It's just not possible. This is a phenomenon that we've seen play out before. I mean, if you pull up the market cap of Microsoft, Apple, and Nvidia, you see they hit a ceiling. It's a multi-trillion-dollar ceiling where those companies hit $2.5, $3 trillion market caps in that right side of the screen, and they're just kind of stuck there. And the truth is, even with people out there like Dan Ives saying in the next couple of years that Nvidia could go to $250 a share, which I did the math on the back of a napkin at about 25 billion shares outstanding. That's $6.1 trillion market cap. It's not happening, folks. There's never been a 4 or a 5 or a $6 trillion market cap company. Nvidia just can't grow into that valuation fast enough. So what do we do? Where do we turn? Am I saying that the AI trend is all hype and now it's set to fizzle? Absolutely not. The AI trend is here. It's real. It's in the early stages. But when you have multi-year and I'd argue multi-decade growth cycles, you have to look beyond the obvious winners from the first round to make that kind of profits in the second round. So what do we do here? We could go and invest in Nvidia's friends. If you looked at the latest quarterly report, there was a lot of companies that Nvidia is partnering with, including Oracle and Cisco and even the great Mickey Mouse himself over at Disney, which, by the way, dumpster fire for capital. I would never put my money there. I think it's hugely exposed, but that's another tale for another day. But where should we invest? Well, folks, I'm going to bring you back. Earlier in the episode, we talked about one of my fundamental beliefs and core rules for investing is follow earnings, right? Follow earnings growth, find earnings growth. Nvidia has been growing earnings tremendously. Its valuation has come down to much more reasonable from an 80 times PE to about a 36. but there's other companies out there that can keep growing. So we always focus on here earnings and small and micro cap companies, and sometimes the mid cap. Why? Because those companies can grow a lot faster, more quickly, and get a lot bigger. For instance, we're going to talk about a company very shortly here that's one of the picks, one of the top 10, that's trading at a market cap of about $26 billion, right? It could increase 10x from here. You could have your first 10 bagger, and it's still only at about a $300 million market cap, right? And if it went to a $3 trillion market cap, you'd have a 100x return, right? The next one is at a $13 billion market cap. And that's what we're going to focus on. So for us to make gains in the markets, we can't ride the momentum on the biggest stocks. We can, but we can't have expectations that we're going to make triple, quadruple digit gains. We have to find smaller players levered to the trend. Now, I'd also say one of the things we have to focus on here is, do you really think chips are the only way to profit from this? If we look at the growth in Nvidia's customer base and who's using it, you see the number of developers that are developing with their chips, the number of startups that are using their chips for different functions is absolutely exploding here. And the number of applications using these GPUs, and this is just, I believe, in the last 4 years on this chart here, you see a massive increase in the adoption of these AI applications. And here's what I really want to drive home. These are not chip companies. These are not companies that are coming out with the newest, latest, and greatest chip and trying to build it on the back of Nvidia's chips. These are actually solutions. The next wave of profits from the AI trend is going to come from companies that are delivering solutions that actually accelerate the business that they're already in. And I think that's a key distinction. We're going to bring it up with our guest that's joining us in the next block, Daniel Newman, who has an inside seat for all of these deliberations and tech innovations. But all right, let's boil it down. Where are we going to go? Why are we focused on the next wave? And we're coming to the third rule of investing that we follow here that you've heard me talk about. Follow the patents, right? Because if earnings are what drives stock prices, what do you need before you have earnings? You need sales, right? You can chime in on socials if you have any guesses here. I can pause, a dramatic pause, see if anyone gets the answer here. But before you have sales, you got to have a product. And before you have a product, you have to have patents. And if we look at patent filings related to computing in the US, you see this massive expansion, right? 6,000 more patents in the last year. Year over year, we increased 6,000 patents. That's more than we saw in 18 years. It's 6 times more than we saw in 18 years innovation. The last time we saw this rate was going back to the dot-com era where we had 6,300. But again, that was over a span. I can't even read the screen here. I'm late 40s. My eyes are going. Maybe it's 5 years, 8 years. Taylor, hook a brother up. That's 1980. But what's that green thing say? Right? Go up from there.
1996 and up.
Yeah. All right. So 8 years. So look, the point is this. We've seen massive growth in patent filings, which is an earliest indicator that we get that there are new solutions in AI coming to market. We want to be on the forefront of that. We want to be investing in the companies that are behind those patents, investing in the products that are going to be powered by those patents, and investing in the stocks that are going to deliver those 10x and possibly 100x. So without further ado, let's talk about 2 of those stocks. We're going to start higher up in the market cap rank, and then over the course of the next few weeks, on the next show and the next edition of our newsletter, we're going to reveal 2 more of our top AI picks, not named Nvidia. But first up is a company that maybe you've heard of, Teradyne. Now, Teradyne is a maker of chip test equipment. That's right, they make equipment that makes sure semiconductors work. And if you think about it, it's kind of a crucial thing. The average semiconductor requires 250 plus steps for actually to be produced. The latest and greatest node, which is the manufacturing plant that they make semiconductors on, costs billions of dollars, $4 to $5 billion plus to make that manufacturing line. You better bet that they're going to test and make sure the chips that come off that line after such a hefty investment work. And that's what Teradyne's bread and butter business is all about. From the beginning of days, this is a company based in Massachusetts, if I remember correctly, $13 billion market cap. They've been developing test and automation equipment, which drives about 84% of their business. And guess what? As chips get more complicated, as AI drives the complexity of chips up, it drives the need to validate that they actually work. So you're seeing a boom in Teradyne's business from that. You know, it's also, so it's coming on multiple fronts as well. It's coming on from compute. It's coming for testing chips that are related to storage. It's coming from related to chips. You know, people think about data centers and the AI chips that compute all the data, but you need really high-end chips to transfer that data. So the interconnects is what they're referred to. So the data infrastructure. Teradyne's levered to all these things and enjoying impressive growth as a result of it. But they're also benefiting from robotics. That's right. We had an argument a couple of weeks ago with my pal Kenny Polcari about whether Tesla was a robotics company or not. And I come down on the side that they generate a great old zero bupkis of revenue from robotics. So therefore, they're not a robotics company. But Teradyne, 16% of revenue from robotics and automation. So this is a company that levers you to two trends I think is a very compelling play in the AI space, a lower risk play that has a lot of growth potential. But maybe you think differently. If anyone here is checking out the chart, if we got any of the penny boys around, because I know those guys are quick researchers, chime in, let us know your thoughts. We're going to be putting out more information on Teradyne in the next edition of the newsletter. No intriguing M&A options for Nvidia to explore to assist with this growth? That's a great question here. Can Nvidia get to that $4, $5, or $6 trillion market cap that Dan Ives suggests through acquisitions? I don't think so, right? I just don't foresee it happening. What could they acquire? They'd have to grossly overpay, and then it wouldn't be immediately accretive. I don't think that there's any killer AI apps right now, but look, to be determined. I think right now, what you're seeing is AI chips are the commodity, the hardware, and the further we go down the line, the better the competitors are going to get to matching NVIDIA's chips performance. But what can't be matched, so that's going to squeeze margin out. What can't be matched is unique solutions using AI chips, right? So products and services, we've talked about a few of them here, drug discovery, medical devices. There's going to be tons of margin in that. So great question. I'm sure NVIDIA will make acquisitions. I know there was some news earlier today about some acquisitions in the AI space. Expect those to continue. But all right, Teradyne's pick number one. Moving along to pick number two. You've probably never heard of this. It's a company called Samsara. It's actually bigger than Teradyne, $26 billion, $23 billion market cap. The ticker symbol here is IoT, which should ring a bell for any tech aficionados out there. The IoT is the Internet of Things. Remember that trend? Remember when we basically decided we're going to stick chips in everything to track it, trace it, and give us information? Well, that's what Samsara's bread and butter has been. That's what they led the business growth by doing. Both think about logistics, so FedEx, DHL, delivery trucks, waste management trucks, construction. Putting them, it's what we'd refer to as telematics, collecting data for vehicles that are on the road. But it really, now the chips have gotten so small, you can put them into anything, pieces of equipment that are used on construction sites that are mobile and moved around. And guess what happens when you have all this data and these sensors collecting it, and now you have a way to rapidly and massively compute that data? That's AI. You lever AI onto this trend, and this company's been growing at 25% sales growth because they're unlocking new efficiencies, more productivity, and a lot more safety by using AI. So Samsara, this is another one. We'll be sharing more information. We're actually going to provide what we would, our inaugural research reports. So be sure that you're signed up for our newsletter. Violator 2020 coming back with a question. What do you think about Parker Vision? Lots of patience and pending lawsuits against Qualcomm and others. I think you meant patents, but you do need patience. That's what I remember about Parker Vision. If we pull up the max chart on Parker Vision, this company's had a massive patent portfolio for a while. Back in the dot-com, post-dot-com days, had a huge run, a lot of litigation. It reminds me of a company named Vernetics that has a lot of wins against Apple, and then they just keep getting invalidated or drug out in the courts. I do not, by and large, look to own companies that are just patent holders. I like operators, but that's a story for a whole nother day. But Parker Vision, familiar with it, haven't looked at it recently, but it's been a long, tough slog, I know, for shareholders. A couple of friends of mine are involved in that name. So appreciate the question. If you've got any more, make sure you chime in. And before we move on to our next block and our first guest of the show, we want to make sure you're signed up to get our full report and the rest of our picks that are the top 10 AI stocks other than Nvidia. So please scan the QR code on your screen or go to thebigskinny.com. That's right, thebigskinny.com, And we'll be right back after another ad from one of our wonderful sponsors. Attention investors, are you looking for a high growth opportunity in the energy sector? Well, look no further than Prairie Operating Company, trading on the NASDAQ under the ticker symbol PROP. Prairie is America's premier high growth, low cost oil producer, and it's making waves in the DJ Basin, which is in Colorado, not the Permian Basin. How do I know this? Because I'm an employee of the company, so I'm deeply conflicted, but still here telling you about a unique opportunity because it is that unique. Why? Because of the recent transformative acquisition, the company has been able to expand its footprint to 55,000 net acres, basically the size of Miami, and increase daily production by over 25,000 barrels of oil equivalent. Prairie is poised for impressive growth while maintaining a strong balance sheet and delivering value to shareholders. That's the commitment. So don't miss out on this potential investment opportunity. Do your own research. Check out Prairie Operating Company, PROP, on the NASDAQ. Past performance does not guarantee future results, and please consult your financial advisor before you invest. We'll be right back.
Basenese sitting right next to me. What do you think we'll see from Nvidia?
You know, it's really hard to find anything to disagree with this man on. I've known him for a while, and his insights are impeccable. And I would agree. We're looking at Jim Collins. Instead of good to great, it's great to good. And is that going to be good enough for Nvidia? You saw the earnings, as he mentioned, the sales growth rate is declining from 265, a blowout time a couple years ago, to now about 60% and maybe 50% in the next quarter. So it's about the guide. I think everyone expects the lumpiness from China. I think everyone knows with this strong of a growth trend, you can overcome a couple hurdles at 1 quarter, 2 quarters of demand in a certain market, like Apple has done historically. I think that's something that everyone anticipates.
All right, big picture for the whole market. You say ignore any negative headlines that come out of tariff disputes because you expect the market to rally in the second half of this year.
Look, Yogi,
big picture.
yeah, big picture. Yogi Berra, deja vu all over again. We had Liberation Day, the markets tanked. Retail investors actually were the smart money, kept buying. We're seeing this play out. President Trump is escalating to negotiate. It worked with China. It's working with the EU. It's going to work with any other holdouts. You either got to play ball or pay up, and he's making sure that that happens.
All right, next case. Thank you.
Welcome back to The Big Skinny with Lou Basenese, and we are here, and I am pleased to be welcoming a guest, someone I actually just met in person for the first time last week in the green room at Varney, but well, we passed each other in the green room to the Big Money show because he was coming on right after me, and this is someone I felt like I've known for years but can't believe I haven't met yet because he does tremendous research with his company, the Futurum Group. I think he runs about 4 or 5 other companies. He's a regular on every media outlet out there. I think he rivals Dan Ives, except he's just a more understated dresser, which I respect more than Dan Ives. So welcome to the show, Daniel Newman. Good to have you, my new friend.
Yeah, I stick with blues and blacks and grays. My hair is the statement. So
well said. Well, listen, I do want to talk Nvidia, right? That's top of mind. And then I want to back into the fact that I forgot to mention you have 7 best-selling books. I have 0, so I'm a little bit jealous. Maybe 1 in my career will happen. But talk to me about Nvidia because you are one of the leading voices on the company and understanding the space. And what were your impressions after the quarterly earnings report?
Well, first of all, just about the books, Lou, you have so much time that you have back because you didn't spend time researching to write books that have like a 15-minute window of relevance. You know, I wrote a book called Human Machine in 2019. I mean, I was like 5 years ahead.
Yeah.
But I can't go back in time now. No, Nvidia, this was another sort of big moment for the company. We knew with everything going on in China that was going to be the focus of the quarter. Almost every quarter these days, there's like a theme. It's,
right.
You know, is there going to be a delay in the ramp? Are XPUs going to displace GPUs? That was a big one in the past quarter. And this quarter was the China quarter. It was all about what happened, how much would they have to write off? Do the H20s have any other logical buyer? You know, what's going to be the long-term prognosis on that particular market? You know, what would Jensen say about it? Was he going to be optimistic or is he going to continue to push against the administration?
And do you think he answered all those questions and concerns? Do you think he overcame them for the market?
You know what, I said the same thing I think I said when I sat next to you with Stu on Varney. I think he answered the question correctly if he's the CEO of Nvidia. I don't think that answering the question the way he is right now is reflective of good policy if you are the United States of America. I mean, this is a really difficult situation.
Explain that, because I don't know that our viewers necessarily understand the nuance here. You and I got into it a little bit, but go into detail there.
I mean, let's just start with, for instance, right now, the relationship with China is complicated. And stepping aside from all the sort of FUD, stepping aside from all the provocation that people like to do on socials, we have a meaningful difference in belief about trade policy, a meaningful different belief in our views on intellectual property. We have a different viewpoint on how we want to invest in assert dominance in the world's trade order. We've always tended to do it more collaboratively.
Right.
We provide a lot of humanitarian aid and investments in different parts of the world, whether you agree with it or not. We tend to diffuse technology in a slightly more, and I say slightly more because there's, of course, these sort of darker representations of how our data is reflected, the Patriot Act, everything else we do. It's not like they spy and we don't.
Yeah, we're not saints by any measure, but we've been good global citizens and tried to spread the innovation. And now we're, from your view, pulling back from that with China?
Yeah, well, I mean, largely, like, even if you look at, just the way China now as the world's second largest economy is recognized differently by the World Trade Organization. It's not a developing country.
Yeah.
But yet they are firing up 2 coal-fired plants a week right now. They have carbon emissions. Like, talking about one of the great ironies right now is that we have, I guess there's so much of this sort of Trump derangement syndrome right now that the Democrats, the left, is pro-China now just because Trump is anti-China, not even for any other reason. I mean, you've got the Uyghurs, you've got slave labor, you've got IP rights, you've got significant challenges in terms of, even things like rare earths or the APIs required for our drugs that they're withholding from us. But for whatever reason, the reporting all tends to focus on us withholding a 4-year-old deprecated chip from them that they don't need because they already have better chips.
But they're the victim in this. Don't you get that? That's the new headline. No, look, it's an important perspective. Before we move on a little bit here, because I have a lot. We have a lot of people here watching. I want to give them a chance. Daniel and I spoke about this. If you want to troll us, try. We're here. We're thick-skinned. We can handle it. Throw it what you got. But also, we would love insightful questions so that we can dig into Daniel's experience. Because, I mean, let me tease this out for the viewers that don't know. And I don't know that I fully understand, but you're working directly with some of the biggest tech companies in the world. So you have an insight to helping and guide and understanding how they think more so than probably anyone else. I would argue that's on TV all the time. Is that accurate, or how would you describe it?
Yeah, so we're industry research. So if you sort of bifurcate, equities research don't really touch the companies because that's got a conflict of kind of the church and state.
Right.
The industry research, we're advisors. So we advise over 400 of the world's largest tech companies, including Nvidia. I have a great story last year at GTC. I've worked with Jensen for years. And by the way, I've known Jensen before Jensen was this Jensen. Now Jensen's
before
still
he was the rock star,
great human, but he was like a little bit more. He was a little he probably before the 100 billion valuation. He probably could go back to that Denny's and have lunch. Now he probably couldn't even do that safely anymore. But yeah, he comes down. We were at the Signia Hotel in San Jose, where GTC was, and he comes down the elevator, and there's a crowd. Like, this is weird, like, because I'm around these CEOs all the time,
right?
And there's a crowd waiting for him, and there's an elevator being held, and he's got his muscle coming in behind him, and myself and my best friend Pat Moorhead, who's also another commentator that's pretty well seen out there.
Yeah, I got to get Pat on the show sometime too. We'll have a 3.
Yeah, I'll introduce you guys if you don't know. But we're standing at the elevator banks, and Jensen walks down, picks his head up, he looks at Pat and I, and he goes, "I know you two. You're coming with me." And he grabbed us, and this was last year in the middle of the AI Jesus moment, and we're like, it's Jensen. He's asking. I mean,
the original disciples. You're the OG disciples, or you're the AI
OG. So that's the kind of relationship for years that we've had with these people, is that when they're building products, they're asking us about it. When they're developing strategies, go to market. So our firm, we do research for the market, for the industry. And it's always like this really careful line I have to toe when I'm doing commentary on markets, because I have so much NDA insights that I can't ever talk about what I already know.
Yeah.
And so oftentimes I have that kind of, I've known the numbers. I've known what's going to be presented on investor days. I know, but there's a lot of things I don't know, and anything I don't know, I'm obviously free to comment on.
Yeah, no, it's funny. I don't think people appreciate too, because I was coming out of the investment banking side and then in the analyst side, that people talk about insider information and blanket it immediately as all wrong, and it's actually not. You're allowed to have material non-public information. You just can't do anything with it. You have to learn to be quiet and wait till it comes out, and that is a definitely delicate balance to walk. So much respect there, and I appreciate you giving people the insight to like how you know so well what you know. I want to pivot a little bit, maybe away from Nvidia, because you tweeted maybe yesterday or today that Taiwan Semi has an absolute monopoly. And this is one of my other chip stocks that I put out there and told people, like, look, if you want to own every growth trend in the chip world, you own Taiwan Semi because they make them all. What are your thoughts on Taiwan? Like, why would you say they have an absolute monopoly? And
it's just Samsung's fumbled. They're one of the logical competitors below 7 nanometer. Intel should be competing, and I'm a big backer. I'd like to see Intel be successful. A lot of people would. I work very closely with Pat. I've gotten to know Lip-Bu since he's taken the role. We should be cheering for Intel. First of all, just very clearly, Taiwan will never bring its best IP to the U.S. It's a good point. Its national security depends on it keeping it in Taiwan. So they're going to bring us close to the leading edge, but when they bring R&D over here, it's always going to be a generation. So just alone, like if there was any sort of escalation in the region and Taiwan was invaded, I guess it seems sensational, but I mean, I was reading an article just yesterday in the Telegraph about, in 2027, Xi Jinping has a plan to go back. We've heard that.
Oh, yeah. I think it's more than just, I don't think it's a
Lou, we would be literally stuck in time. Like we would not be able to produce the next generation of chips. So we need a strong Intel. But having said that, there is no option. So when I say they're a monopoly, look, they raise prices 10%. Nobody squawks. Yeah. Nobody says we're not going to buy, we're not going to commit. They're sold out of capacity, and they could raise their prices 10% more, and they would be sold out of capacity. You got Qualcomm and Broadcom and AMD and even Intel that uses TSMC for leading edge chips. We need competition there. Having said that, TSMC is a great partner. When I talk to the CEOs of these companies, I mean, many of them told me, like, this is when the CHIPS Act were going on. They're like, yeah, we don't want to use anyone else. We like TSMC. Yeah. This is not some sort of asymmetric relationship where people are unhappy. The product is good. The yield is good. The quality is good. It's a really strong relationship, but it doesn't solve the problem. The reason we are in a global trade war is not about, manufacturing Nikes in the United States or screwing in iPhones. The reason we're in a trade war is because we need to protect our IP. We need to be able to build the things here that literally we could become dependent on in a dark or cold situation, like a war in the East. And we don't have an answer for that. I mean, Intel is the answer, but it's not the answer yet.
Don't you think there's all those interconnectedness and interdependencies, though, in different areas of the? I mean, I think we can't separate out the entanglements, right? We need TSMC for chip production unless Intel really steps it up. China needs us for certain things. And if you start trying to separate this bowl of spaghetti out, you realize that it's all one big noodle, all intertwined. So that we have to come to some agreements, right? Like we do have to protect IP. I fully agree with you on that. It becomes more difficult, but at the same time, you're talking about we get TSMC's, a generation behind chip, but that drives our innovation here, right? Just getting access to that. So there's got to be some give and take. How do you strike a balance? I guess
there's a little bit of a likeness to it. Go back to the H20. There's this kind of school of people that believe if we ship H20s, that China's not going to develop its own most advanced AI chips and its own foundries and semiconductors. And I think you and I probably share an agreement that they're going to do it anyway. And the US should be doing this anyway. Like we should embrace TSMC and they're going to bring closer and closer to their most advanced nodes. They just won't bring their leading researchers. They're not going to give us the best of their research, the best of their IP, because like I said, they hold the cards. What would, if we had all that, why would we protect them other than goodwill? Yeah. Right now we need Taiwan. It literally, we go to the Stone Age if something happens there.
We're not supposed to be depressive here. We're talking about innovation on the front edge, but you're right. It's a reality. I mean, is the stat still accurate that Taiwan as a country manufactures more than 60% and mostly the high-end chips in the world? Is that, I mean,
it's more than that. And to be clear, you know how much of the high-end chips that are really made here by, well, first of all, none by U.S. companies right now. It's like nothing.
Yep.
It's literally nothing. I mean, Intel could bring that back. But yeah, I mean, we went to almost zero in the domestic leading edge chip production. Now we have some lagging Essential, the global foundries of the world, TIs and others that do manufacture chips here. And we saw during that supply chain crunch how much, whether it was for automotive, we saw chips for electronics, higher, 14 nanometer and above. We were in shortages. You couldn't get a car because you couldn't get the radio to work, or you couldn't get a seat to move. So
that's a good point too, because I don't think people realize how much the chip components of automotive has increased. I mean, in the last 4 to 5 years, I mean, it's dramatic.
Massive.
Yeah. Hey,
massive
we got
thousands, or it could be 1,000 or more semiconductors in a single AV,
which is wild, right? I used to drive. No one will believe it. I'll bring a picture next to a 1957 oval window Beetle in college, and before that a 1978 Volkswagen Transporter. I think it had 0 chips and only had 3 things that could go wrong with it: run out of gas, the brakes would fail, or the battery would go out. That was it.
You're aging well, Lou.
I'm trying my best. Hey, we're gonna stretch. You and I talked in the green room about the big money show, where sometimes we get stretched into areas that aren't naturally in our domain. I don't know if this one is, but we got a viewer comment here or question about Bitcoin. Glad I'm skeptical about Bitcoin. This person's dipping in their toe. They're worried retail's piling in. Where do you stand on Bitcoin? How do you see this in the whole tech ecosystem? I've always said the underpinning of Bitcoin, the distributed ledger, is interesting from a tech innovation, but the cryptocurrency itself is still a fascination to me. Where are you at?
I am a dabbler, and unlike the tech industry where I have all kinds of unique and inside information, I am following signal, people I trust, outsiders. Yeah. I've got some crypto projects I believe in because I understand them better. So like the rails of development on Solana, I've been a Solana investor for a long time, and I buy it every week. I also am a Render investor. Render is the GPU network on the distributed ledger. It's actually GPU power distributed. That obviously made a lot of sense for me. Going back to Bitcoin, I own 2 Bitcoin. I've bought over a handful of years, and I literally just, I actually, just to be really clear, since I can actually disclose this position, Lou, I buy Bitcoin, Ethereum, Solana, and Render every week, but really? Just some small nominal amount. I did it on the ups and I did it on the downs.
So we were talking with Anthony Pompliano, and he got me over the bridge of there's 2 camps, right? Cryptos are for speculating, but then it's also for preserving purchasing power. Think about it as your checking and savings account, and it's just a way to diversify out of dollars. I mean, is that how you treat it? It's just kind of dollar cost averaging, for lack of a better term, but in crypto cost averaging.
I look at every dollar I own that's not invested somewhere as a bad dollar. I really do. Like the way our inflation works, the way money and the dollar is being devalued, the way I don't see a point in not having your dollars invested beyond whatever money you need for the next 30 days. And so, Lou, I think I've kind of gone that Kevin O'Leary camp. Kevin likes to do the shows we do.
Oh yeah.
But like, I think a couple percent of your net worth in this, it's super speculative to me, but the returns are better than any other investment today.
No, listen, I think it's the new alternative. I absolutely agree. It's just prudent diversification to have 2 to 4% exposure. I mean, I couldn't argue with that with anyone. I just dismissed it early, just like I dismissed Nvidia, and I regret it. Now I'm sour. I don't have 7 books written. Hopefully AI will solve that. But no, I'm starting to invest and come across the realizations you're having and the benefit of just doing things like this with Anthony Pompliano, people like yourself, like you said, you were close to it and people educated you and go, okay, this actually makes sense. There's reasons and there's applications for this, why this is going to appreciate in value.
Lou, when Nvidia in July of 22 was down at about 150 pre-split, I went on Squawk Box, and I believe it was with Becky. I kind of had it out at the time because they were telling me it was going to go to zero. And I basically, in July of 22, before ChatGPT, I basically said to them, I said, look, you either believe AI is a thing or not.
Yeah.
If you believe AI is a thing, put your money into Nvidia. Which, by the way, I just want to be clear, I can't own any.
You can't because you work with them. Yeah, yeah.
Yeah. So just to be clear, like I have like some of my managed dollars, like and stuff like that. I have some exposure through managed funds into Avago because I love Avago, by the way.
Avago is a great stock. Yep.
Great. But I if I'd have followed all my own advice, I mean, one thing I can say is, if you follow my advice, not what I own, follow my advice. Because like the things I own, like DraftKings, like it's just sideways for years. I love SoFi.
You got to do Flutter, man. Flutter's a better pick there. Yeah.
I have a huge position in that, and I just can't believe it's still $13. Like it just blows my mind. I did go all in on HIMS and Robinhood this year, though.
So now we got the Navigator coming in. Wait until quantum computing takes your Bitcoin and other crypto. We need a hard currency. So we'll see. I think we got a ways before quantum, but we got a wrap here. So this is what I've learned always. Don't ever get enough time to talk to you. Always enjoy it and learn something new, man. I hope we run into each other in the green room soon, and we'd love to have you back if you're up for it. Maybe bring Patrick along as well.
This is fun. We'll do it sometime soon. Great show you have here on the Big Skinny. I'm a fan, perma fan, everybody.
All right, man. That's what we love to hear. Ring that register. We're gonna make money off of that. Dan, man, honestly, truly a pleasure, and look forward to talking with you again soon.
See you, Lou.
All righty. We will be right back after one more word from one of our sponsors here at the Big Skinny. And it helps when I can find the sponsor language here. But you know what? Ba-doom. I got it on the screen. It's in Send Media. And, business moves fast, especially with AI, and so does search, because AI is transforming how customers find you online. How'd you find us? Well, if your business isn't optimized for AI-driven search, you're missing opportunities every day. Send Media is more than marketing. They're strategic growth partners using advanced answer engine optimization, cutting-edge SEO strategies, and proven business analytics to help your company generate new leads, attract more customers, and solidify your brand's presence. In the era of AI, visibility equals profitability, and Insend will ensure your business stays ahead. Visit insendmedia.com today or scan the QR code on your screen. And don't forget to mention the Big Skinny to the owner there, George, because you're going to get a free SEO performance audit. With Insend Media, your growth is just a click away. And we'll be right back.
Zscaler is, quote, the first cyber company to execute well through April as macro uncertainty has weighed on competitors in the space, and you see the stock up over 8%.
Yeah, I think as investors, longer term, if you're not focused on this week or this quarter, there's two trends you have to be exposed to. It's cybersecurity, because we've criminally underinvested in it, and we're always reacting. We can never get ahead of the threats. So I think it's encouraging to see here. If you look at hiring trends, spend on cybersecurity, they're all going in the right direction for this to be what I'd call a forever growth trend, because we never get in front of it. But then the other one is semiconductors. So I think these, out of the two, call it 10 big tech trends that are out there, whether it's EVs, AI, I think you really got to be wed in your portfolio to cyber in some way. There's no silver bullet solution though, so I don't advocate buying an individual name, because there's no one company that can protect against everything. So an ETF, like Hack was the oldest cyber ETF, is a great way to get exposure. Same thing with semiconductors. If you don't want to deal with the little nuances of who has auto exposure or not enough AI, you play the ETFs like SMH, and you tactically allocate on dips. So I think really good opportunities coming up here. This is proving it out. Zscaler showing, even in a tough market, the right solutions will work in cybersecurity.
Great overview, Lou. Thank you so much. Appreciate it.
And welcome back to the Big Skinny, my favorite time of the show, when I welcome my friend, partner, and designer and marketer extraordinaire, Mr. Dodd. I'm going to call you Mr. Dodd. Is that all right today?
Absolutely, sir. You can call me Mr. Dodd anytime you want.
All right, all right. Oh, you're down south now, getting an accent on us. Hey, listen, join the conversation. We got about 5 minutes to go before we wrap up. You can chime in at any time. APLD, what do you think of today's announcement? I didn't see it. That's pretty bad. Is that Applied Materials? And is that, I can't remember, Action Jackson? We talked about that one a long time ago. I'm gonna have to look that one up. Bring it up next week on next week's show, and I'll come back more informed. See, I'm not afraid. Remember the other rule, the fourth rule. We've covered 4 rules of investing here today, is be humble or be humbled in the markets. So I'm gonna be humble and say, I don't have a clue. What else don't I have a clue about, Dodd? This is the time when you fact check me and ask a couple questions before we get to the high five.
No fact checking today, Lou, but I do have a couple questions. First of all, Daniel's story about Jensen. You ever have a moment like that? You know, come off an elevator, crowd of people waiting for you, that type thing?
Yeah, no, I've never had that. It's not me, man. I've never even been invited into the rock star crowd like that. So he's got some unique
Maybe
perspective,
someday.
man.
Something to aspire to, right?
Yeah, I got to get a book written first, but I'm hoping AI gets that done for me. So
There you go. Maybe we can work on that.
yeah.
You know, the other thing I want to say, you know, there's a new design going on here and a lot of new stuff in the show. You know, really digging it. So, you know, what's going on with
Listen, yeah, I give credit to all of you. I have no design skills whatsoever. Dodd, Taylor, Daniel, making it all happen here. We're going to iterate. It's the Japanese principle of Kaizen, you know, constant iteration and to lead to innovation. We're here for the long term, folks. So if you enjoy what we're doing, please share it. We want to be doing it for a lot longer. We're figuring out the ad model so that we can be doing this, but it's fun. We want it to look good as well. My wife said that was a great guest segment, so that's it. We win. That was a win. But you're noticing the design, like, oh, yeah. So kudos to everyone else around. I want to give you all the credit on that one. All right, we got 3 minutes, 5 topics to hit. And can we do it quickly in the high five? Is it time to
do it.
Cue up the high five? All right, my friend, here we go. One of these days we're going to work Tommy Boy into the show because that's just kind of just a classic from our generation. We're aging ourselves, but all right, what are we talking about? Dumb and Dumber right off the bat?
Dumb and Dumber. I mean, how convenient there. So
Yeah.
you're telling me there's a chance.
We talked about smart. There is
I'm
a
guessing
chance.
you're talking about, you know, dumb money ain't so dumb anymore.
I am talking about dumb money's not so dumb anymore. You remember we covered that in the last couple of episodes, how the smart money's actually been betting against the markets, and the quote-unquote dumb money, you and me and everyone else watching, the lowly retail investors, have been buying the dip every chance they get, and they've been outperforming. And here we see it again. If you look at short interest by hedge funds right now, they're just going all in short on the markets. Meanwhile, us dumb people, us dumb money is not looking that dumb because we keep buying the dip. So yeah, Dumb and Dumber. We're going to have to rebrand that Wall Street cliche about smart money and dumb money because smart money got stupid, and maybe you can't fix stupid this time. I don't know.
All right. Place your bets. Please tell me we're talking about the big skinny beach at Tao Beach in Vegas.
Yeah, I know you want to get to Vegas. You're always thinking about Vegas, man. Placing your bets at the slot machines, worst odds in the house. Let's play craps instead. But no, let's place our bets. I've been a proponent of the Fed not hiking rates at all last year. I mean, cutting rates, not cutting them this year. They cut once last year. Now you're seeing headlines that the Fed might not ease until at least September. Place your bets. I don't think it's going to happen at all this year, given the latest economic data. We'll be around, hopefully, the end of the year to figure out if I'm wrong or right, and we're high-fiving or you're slapping me for being wrong.
Might just slap you just because.
I can duck. You're a lot taller than me. I can get away.
Consumer concerns. Egg prices in New York just so much as, omelets are on layaway plans now, or what?
Yeah, look, there's this narrative that the consumer's in really bad shape and that it's just on the precipice of falling into just an economic depression, and the data doesn't support it. I mean, sentiment got really bad, but personal spending was going higher, and now here we have another data point, right? We always like to be driven by the data, and if you look at delinquencies for various types of debt, you're seeing a lot of headlines about a spike in the delinquencies being late. But put it in perspective. Like, yes, it's possibly a concern, but it's nowhere near the levels that is a real concern and a real issue like we saw going through the great financial crisis. So total debt by delinquency, yes, the rates are rising. Keep an eye on the rising rates, but don't be raising the alarms just yet like everyone else in the headlines.
All right. Please tell me biotechs are coming out of the gutter. What's biotech?
Yeah. Look, we're seeing, there's uncertainty about the FDA, the cutbacks, and RFK Jr., but we're starting to see money get spent by the bigs in biotech again. Sanofi out with an acquisition earlier today, I think a $9 billion acquisition. Nice little 30% premium to share prices. You saw another purchase. It was up to a $12 billion partnership deal with Biotech. So we're seeing the money coming back into the sector, which I think is a really good sign for this battered and beaten and bruised biotech sector. And I ain't got no more alliterations to put on that one.
All right. Well, let's see. May the 4th be with us, man. Is we good month of May.
Sell in May and go away is the old Wall Street adage. And if you did that, the smart money, you got your clock cleaned again, right? May was the best May in the last 35 years here. Stat from Ryan Detrick over at Carson Research. Does some great data crunching all the time. Really admire his work. Hopefully we get him on the show one time to really step through it. But look, don't sell in May and go away. We've been talking about this every episode, 11 strong. You got to be in the markets to make money in the markets, right? It's not timing the markets, it's time in the markets. And if you're trying to get in, get out, look at this chart alone. Look at just the May performance going back to 1980. Some months it's up, some months it's down. If you can predict which way to navigate that consistently, no thanks. You should go predict the lottery winning lottery ticket numbers, because it's just not going to happen.
Man, we wish we could do that.
I know, that would be nice. But you know what I wish we could do? I wish we could keep going longer. I wish we had more people tuning in. So please don't be afraid to share what we're up to here at The Big Skinny by joining our newsletter at thebigskinny.com, by retweeting, posting, whatever you do, whatever platform you're on, whatever you feel comfortable. We appreciate your time, your attention, your loyalty and support. And we hope we're starting to give you more information so that you can see through the headlines, see the data that matters, and start making the investments that matter for your bottom line. So with that being said, Dodd, we're done. Episode 11 in the books. Thank you.
Thanks, Lou.
All right, brother. Till next time.